later stage, it's good. They may be ready to talk to a VC or to a bigger fund or to a different high net worth individual.
Thank you so much for tuning into Journey with Christian D. Evans podcast. I'm your host, Christian D. Evans. This next guest is the charismatic capital raiser, investor connector, and Series A expert. With a proven record of raising funds for tech, AI, blockchain, and impact startups, this man brings the heat to the investment game. Armed with certification in capital raising and a network of over 20,000 private investors worldwide, he's the go-to guy for those rare investment gems. This man's passion for the industry shines through as the masterfully connects entrepreneurs with equity investors and lenders. When he's not fueling dreams and making an impact, you can find him embracing the exciting world of tech, startups. Buckle up and join the journey. Please welcome my next guest, the CEO of Hermes Investment Services, the one and only Antony Chauvet. How are you doing today, Anthony?
I'm good, Christian. Glad to connect today and to do this interview.
Well, hey, I'm looking forward to this conversation because, like I mentioned in the beginning, just incredible background starting out and what you've been able to accomplish. Very, very impressive. My question is, before we dive into all the fun stuff, the deal flow, the networks, the connections that you've been able to build with incredible investors, what got you started in this? What was your passion? What was the thing that drove you into being a capital raiser and have an incredible network?
Thanks for asking. This story started in 2018. I've been in the investment world since 2013, actually, and I was doing consulting for a tech startup in Toronto in 2018. And then they realized that they needed to find investors. After a couple of months, I was doing consulting for them. And then I started doing that for them. I started seeing what was possible because they were running out of funds. And that's where I started realizing that there was a market demand for that service. And then I started building the company from there.
So how did you, when you were looking at this investment world, did you, because right now you focus on AI, tech, blockchain, impact startups, but did you start out with those investment thesis, or was that kind of an evolution itself? Because everybody's looking to raise capital, and every founder is looking to raise capital, but you got to really target your niche. So did you gravitate toward that, or was that something that was always kind of top of mind for you?
My original background is in tech. I have a master's degree in computer science, and I worked in the tech world for more than 10 years. And that was my natural inclination, is to find investors for tech companies. And also I have an interest in impact, which is trying to help companies that want to have a positive social impact and also have a positive impact on the environment. For example, to help with global warming or other environmental solutions. So yeah, that's how I chose those two fields.
That makes sense. And when you're looking at the tech, because there's a natural evolution, how do you underwrite the deal and making sure that you find the right company to work with in regards to the quality and as well as like something that your investors are interested in deploying capital with?
Well, I've been doing this for a while now, and now I can identify quickly if this can be interesting for investors in our network. Um, One of my mentors is Oren Klaff. He's in the Silicon Valley, and one day he said that people there, the people who vet deals, they when they look at companies, they they see them as kind of oranges, and they shake them next to their ear, and they have an idea if this orange is a good orange or not, because they've been doing it for a long time. So, but seriously, you have different criteria, like well, the revenue, the team. If possible, it's good to see and check how people work together, how well the team can work together and deliver, execute. These are important criteria. The marketing plan is very important also. How detailed of a plan they have and how they will bring customers on board. This is also important.
So, correct me if I'm wrong. Because you've been doing it for so long, it becomes kind of a almost a sixth sense. You're able to identify through previous experience, kind of what you're looking for, what that looks like, the criteria, the methodology to be able to vet these properly. When you're looking specifically in tech, cybersecurity, impact investments, and even AI, those kind of thesis, even within that, there's a ton of different kind of verticals, right? You could be an AI in healthcare, you could be an AI in SaaS, you could be AI in all sorts of different things, right? E-com, all sorts of things. So my question is, when you're looking at these verticals, is there a specific sector that you like to gravitate toward, or industry in general, in those kind of broad, um, you know, investment thesis?
Well, investors and the market rule. So what's important is what investors are looking for and also what the market demands now. Although, I mean, there are companies I like to work with, even if they are not in favor at the moment. So I would say right now there is a lot of demand for AI and also for cybersecurity. Um, Up to the fall last year, there was a lot of demand for fintech, but this has cooled down a lot.
Definitely. So when you're looking at these companies and with these investors, you reach out to your investors, have a conversation, say, hey, what are you looking for? And then go and harness that or reach out to those other individuals, those founders that are looking for it. With your investor group, what kind of LPs are they? Are they, just high net worth, ultra high net worth individuals? Are they family offices, multifamily offices, single family offices, or is it kind of a hodgepodge of everybody?
Well, for this segment we work with, we have high net worth individuals, angel investors, and groups of angels, angel syndicates. We have family offices and also funds, some venture capital firms, but the thing is, a lot of venture capital firms work with later stage companies, late stage Series A, Series B, and we work mostly with early stage companies, seed companies, and early Series A.
Why is that? Do you just find that that's kind of the best service that you can provide, or because I know there's different verticals, but also being able to, we're seeing kind of macro economy right now, a lot of money kind of pulling back from the VC world. Not saying 100%, but we have seen a decrease. There's been a lot of research on that, and then obviously deploying more later stage companies that have proof of concept, dialed in. KPIs, metrics, things like that that can rely on to deploy capital with. So what made you decide to go toward that C to Series A kind of focus point?
Well, it just happened like that. Like the first company I worked with was a tech startup. And then the second company was also a tech startup. And then I found it's a good segment. And the market is also structured like that with the capital raisers. So you have the investment bank firms, and they work usually with Series B, Series C, and they can take a company to an IPO. And then the early stage and the Series A is more fragmented. It's the investment banks, which charge a lot of fees and significant commissions. They don't work much with this segment of the market. So there was an opportunity in this part of the market, and then I've met lots of interesting people, lots of exciting startups, and it's been interesting also to work internationally because we work with companies in Europe, in the US, in Canada, and in Asia. So evolved organically like that.
Well, that's one thing you mentioned this international, which is really cool. Um, I was talking to a VC in Italy, and he was saying that because of their ecosystem, Europe's ecosystem, they don't have a community of high net worth, ultra high net worth as much as here in the United States. So they really have to obviously, leverage individuals like yourself that have deep roots with individuals here in the United States. So when you're looking at international, what would you say is the percentage of international deals versus, United States deals? And then specifically internationally, are you looking at a specific region? I noticed a lot of my LPs are looking at Asia specifically in regards to potential founding and partnerships and so forth. But I wanted to get your response. What are you noticing internationally in regards to deal flow and some excitement where a lot of these investors are deploying capital toward?
That's a very interesting question, and I really love this part of the business because it's interesting to watch what's happening internationally. So half of the business is with companies in the US and Canada, and the other half is in Europe and Asia, occasionally in the Middle East, like in Dubai. And in Europe, we work mostly with Switzerland, the UK, sometimes Germany. And Italy, I talked with some founders in Italy. So they like to work with Switzerland. You may know that there's a segment of Switzerland where people speak Italian. And in Asia, we've worked with Singapore and Hong Kong. And since a year ago, also India. There's a lot of growth in India, and that's interesting for investors because the Western economy has slowed down. So some investors, for example, investors of Indian background who've immigrated to the US, or funds that specialize in India investment, they're really interested in looking at Indian companies.
So this is interesting. When you're looking at these founders, are these direct deals? I'm talking specifically international still. Europe, Asia, like you mentioned, Middle East. There's a lot of money in Middle East, which is actually very interesting. I've got a friend in Saudi Arabia as well that's talking about obviously really expanding that region and deploying a lot of capital back into their economy and back in their sector and geographics. My question is are you noticing more of a fund approach or direct deals?
More of a more of a direct deals approach. We've worked with some funds, but I found we've specialized more in direct deals. So it's possible that there's funds that invest, but we hear more about direct deals because that's what we specialize in. And the Middle East is really interesting as well right now. There is, like I mentioned, India, which is an emerging country, but in the Middle East you have Dubai, you have Bahrain, you have Oman, you have Qatar, you have Kuwait. And this is a region that is growing fast with their capital investments. The financial world is developing very fast. So that I think that will be an interesting part of the world to look at for companies to receive investment.
When you're looking, this is kind of makes me think of another question in regards to like, obviously when you're looking at the criteria and the investment of deploying capital with these founders, it is drastically different from investing here in the United States, in the States, and even Canada, versus obviously India, right? Because of the talent acquisition, because of the marketing, because of kind of the KPIs, drastically different. Maybe some of those companies are founding mainly just service that region, and maybe they're trying to get into the West. So when you're having these conversations or these investors are looking to deploy in that region, India, Europe, Saudi Arabia, internationally, how does their investment thesis change or their vetting process, their criteria adjust or modify according to the region that they are looking to deploy capital in?
Usually they are specialized investors. So they have experience investing in this region. So if it's a company in India, then they'll know how to do it in India. They know the regulatory hurdles that they have to prepare for, and how the tech world works in India. But I would say that the quality of companies I talk to there is really good. There's a lot of growth, dedicated founders, and they don't have access to that much capital. Sometimes they have in with Indian investors, and they know that there is capital available in the US and in other locations. For example, Dubai is very open to investing in India. Um, so like that, it's important to know how the investment funnel flows to those locations, but yeah, there is opportunity there.
I've talked to a few friends, and because of the cost of living and because of the the currency exchange and so forth, you can actually deploy maybe $250,000 or $500,000 into these companies at that series, C to Series A, that direct deal approach, and you can actually make massive headway very quickly because that money goes a lot longer. Have you noticed that as well in regards to some of your investors when they're deploying capital in that area?
For sure, and it's something that investors like a lot, that the how the money is used, the cost effectiveness, it's really attractive for investors in India and in some other locations in Asia. Yeah.
So, with your 20,000 investors that you've collaborated with, how did you get? I've talked to some people definitely in this world right now. Obviously booms and bust cycles. Right now, we're kind of in a bust, which is a lot of people are having a hard time raising capital, and that's just it doesn't mean that it's not happening. It's just that's just kind of the environment. So, Tony, how have you been able to navigate this and being able to still facilitate transactions even with the macroeconomy kind of in a bust cycle right now?
Um, I mean, that's the general view, and I found there's always problems in the investment world. Even in 2019, when things were looking good, there were still problems with deals that were valued too high, for example. So I found the professional investors are still active, less so the VCs, but we work less. We don't work that much with them, only with the early stage VCs. And there's still a lot of activity. We've had a very good year, and the funds, the family offices, they're looking for deals that are attractive. They're getting good valuation offers, which is important. And I would say it's a good time to invest at this moment in the cycle because the companies will then next year in 2025 the company's revenue will increase. So if you look at it from a professional investor point of view, it's a really good time to invest right now this year.
Hmm. Well, I'm so astounded by the network that you've been able to build. 20,000 investors and being able to, harness deals and work with them. How did you get to that 20,000 mark? And what do you do on a consistent monthly, weekly basis to be able to keep those relationships? Because that's a lot of relationships to engage and sustain.
Yes, and one thing I wanted to add on the previous question is the nice thing about communicating with investors and companies around the world, and not just in the US, is that the cycle is different in different parts of the world. So, like I was saying, the Indian market is doing well right now, and there's still activity, a lot of activity in Singapore, for example. The cycle is restarting in Singapore. We have a client there, an amazing AI company, and so that compensates like that. And for your new question, well, we've connected with a lot of people on LinkedIn, and we've built a database over time, and we communicate with investors by email also. And I have a team that helps me. So that's it's a build of the network over the past 5 years. It's just a lot of work, and it accrues over time like that.
Yeah, and what I'm always astounded with is, do you reach out to your 20,000 investors and say, hey, what are you looking for? And making sure you go to your deal flow and make sure you get the right individuals or right deals in front to make sure that it's the best conversion. Otherwise, it feels like you're kind of running in circles sometimes. Is that correct?
Well, the one thing investors need is deal flow, quality deal flow. Because the professional investors, they spend a lot of time vetting deals, evaluating teams, evaluating businesses. And the one thing that's precious for them is their time. So if we can present deals that have been pre-selected for them, it saves them a lot of time and therefore a lot of money. And the first step is we find information about them on LinkedIn, online, whatever information we can find, and then we do a first communication. We send content that's valuable for them. And when you add value like that, when you take this approach, then they're okay to talk with us at first, and when we continue adding value, then they're happy to hear about deals because it can save them time potentially, and down the line make them money with their investments.
What are certain things that you have done during building up your list, building up this relationship, building up this amazing community and network that has, do you feel like has, is a common denominator for the success that you've been able to achieve in regards to all the transactions that you've been able to successfully accomplish?
Yeah, like I was saying, it's adding value to the investors and sending them deals that are potentially a fit for them. And with the companies, two things they're looking for is help with their documentation, the pitch deck, feedback on their communications, and how the process works. Because the one thing the company founders are short of is time. They're so busy trying to have their company get off the ground that they don't have that much time to study how to raise capital and to prepare in detail documents to do all that. And advice on how to build the data room, how to do all that, and also, of course, access to investors. Because when they start, they don't necessarily know how this investment world works, where to find investors, how to communicate with them. So that's what we help them with.
Which makes sense. And are you also kind of a play in a on the back end when that investor and that founder they align in their investment thesis and they want to partner? Do you also help them establish a good investor relation, making sure that hey, and that founder when they start scaling beyond Series A and they start going into Series B and Series C and so forth because it's scaling, it's going wonderful. When they're doing the second and third rounds of capital raising, do you come alongside them even though it may not align normally with your C to Series A kind of structure, or is that more of like you hand off the football and allow them to keep that relationship from the founder to the investor and you're kind of out of?
Each case is different. So, and each story of a company is different, how they grow and how they relate to investors and the people who've helped them on the road. So there are companies we worked with multiple times, and then we help them reconnect with different investors or the same investors they've worked with before. And we advise them on that process. So it depends on the capital availability of the first investors. Sometimes they're fully committed, so they cannot invest more, and sometimes they have more capital available. And for a later stage, it's good they may be ready to talk to a VC or to a bigger fund or to a different high net worth individual. So yeah, each case and each story is different.
And that's how you've been able to establish it. That makes sense. When you're looking at obviously capital raising, I would imagine being able to, facilitate the amount of transaction you've been able to successfully accomplish is very remarkable. I would imagine there were some learning experiences, right? Failures, if you will, that you had to learn from to be able to obviously optimize and modify your procedures, your processes, relationships, etc. What were some of those learning experiences? I know there's probably been a lot, but I would imagine there's probably just one or two that were pivotal in your success and continued success. What were those? What were some of the things that you learned during this journey?
Well, not all companies make it to the finish line. So even though an investor is interested, there over time, between the time when they say we're ready to send you capital, to sign the contract, and sometimes something changes, the investor situation changes, and they decide that after all they are not in a position to invest. That's difficult because it disappoints the company, it disappoints us, and this can happen. And sometimes in the initial phase, everything looks good, and then they'll do more due diligence, and it's not that necessarily there's something wrong basically with the company, but after more due diligence and they investigate the financials, the product, the team, the marketing more, they realize it's not in alignment with their strategy, and again that doesn't go through, and this can happen. So this is a difficult part of the business. It's a very selective business. Investors are very choosy in their capital allocation, and yeah, it's just patience and perseverance are important.
Yeah, because it is a law of large numbers kind of concept. Like these investors, you may get them in front of 50 deals. Out of the 50, they say no to probably a lot of them, and then out of the few that do get to it, they have to underwrite them and vet them. And even those, maybe 10 or 15 that go through the underwriting and vetting, maybe one or two they actually deploy capital. Correct me if I'm wrong, but that's kind of the structure of it.
That's right. So that's why it's so important to know what investors are looking for to increase the odds. Um, yeah, and to know how to communicate with them. Yeah.
Do you play in Hermes Investment Services? Do you guys play a part in not only the introduction, but also making sure that relationship's able to get them to the goal line, right? In regards to, hey, the investor, you help them with the underwriting, maybe the conversation, maybe the paperwork, maybe the whatever, to make sure that you want them to succeed. You want them to build a strategic relationship and the investor deploy some money with the founder, and the founder, being able to scale the business. How involved are you on the back end, or are you just more of introduction, cool, wonderful, and then they start kind of having that conversation, and you're out of that picture from there on?
That's an important question, and it's different with each founder. So the founders like that we do as much of the work as possible, so that when they talk to an investor, they know it's potentially someone who is a fit. And it is a lot of work, which is why we charge a fee. Because we have expenses to do all this and to pay the staff, Now, after this is all done, some founders like that we talk to the investors, that we are the front, that I'm the front guy talking to investors, presenting, and the founder will answer more technical, more financial questions, details about the company. And some founders will like to talk and be the front guy, explain, and we're here as in second position to help with smoothing the communications.
So it's very contextual. It just depends, which I figured it would be, and just making sure that it gets down to the goal line. Because at the end of the day, you want a successful transaction if everything aligns. When you're looking at the tech, impact investing, as well as cybersecurity, I know you come from a tech world and AI as well. I forgot to mention that. I find cybersecurity and AI. I've noticed a lot of my LPs, a lot of my connections, they're very excited about that, and it's really cool to see the deal flow that comes across my desk. But I know some of these other individuals have some really cool stuff. If you could just share some of the ideas, you don't have to mention their names or their companies or whatever, but maybe some things that some deals that have come across your desk that you've noticed are very exciting for your investor community.
Yeah, so right now we just started working with a company that has a hardware solution for identification. So it's a USB stick that you plug to your computer for identification. So it removes the need for passwords. And they're part of an organization that Google and Microsoft are part of. And for standards, for security, I mean, it's a small company, but they're still part of that standard organization that set the standard for security. So I think this is quite exciting because the password has been a problem with cybersecurity for so long. 80% of the security breaches are due to a password breach. So yeah, that's an exciting one.
How did you find that company? Did you just find it through vetting on LinkedIn, or how did you find that? Because I would imagine you have to go through a lot of digging to find these right deals, if you will.
Yeah, on LinkedIn. And yeah, we've developed a good amount of LinkedIn expertise. I've been working for a LinkedIn expert for 5 years. He's in Texas in the US, and he's developed this LinkedIn expertise to really find the kind of people we want to connect with. Yeah, the founders of companies in the tech world we really want to connect with.
That's awesome. That's awesome. And so that's what kind of got you excited, and then you notice like that's a really good offer for some of your deal flow. What's another deal or company that you've noticed that's really kind of sexy right now?
Yeah, I mean, since ChatGPT was released, I've noticed an uptick in interest in AI, that's for sure. The response rate we get for AI companies is much higher. Investors want to hear about them. And we're in discussion with a company that does natural language AI, and it's with an experienced company founder. He has had multiple exits. He's in California, and I think this one will be quite exciting due to the background of the founder, and it's in a field that's really in demand right now.
Yeah, so correct me if I'm wrong, because because of the impact investing, because of the Series A, cybersecurity, it sounds like to me the way you strategize, because you want to make sure that there's this good success rate, that you're able to identify the investors, their thesis, where they're at, what's top of mind, what are some things that are trending, that are hot, and then make sure that you find those companies and make those relationships. Now, with that being said, out of all the investors because correct me if I'm wrong, I saw on your website, I think you've transacted north of $50 million worth of transactions. Is that correct?
Yes, we've crossed that line, yeah.
Which is awesome, awesome. Has that been a you know larger deals, or is it very smaller kind of single deals? Or I'm just always intrigued because to give some context around, like you mentioned at the beginning, is it is law of large numbers, right? And it is making sure that you have to go through the numbers. And sometimes it may be everybody wants that big $10 million check, but sometimes it's those, a lot of investors giving a little bit at the beginning and then obviously, compounding from there. So what have you noticed in regards to deployment of capital? Has it been more of singles, smaller checks and quantity, or has it been those larger, bigger checks?
I would say it's been a steady flow of mid-sized checks. So it has not been one big deal. It has been a steady flow. And it started well in 2018, in 2019, and then in 2020, COVID hit. So it slowed down a lot. And we still did a couple of deals, and then it restarted in 2021 really, and 2022 was a really good year. And 2023 is going pretty good so far. So yeah, that's been the pattern.
That's awesome. That's excellent. That's excellent. And Anthony, when you're also hiring, because you have a team as well that helps you facilitate this. How do you it's not just a one-man band, which that's one of the reasons why I want to have you on as well. You're not only just the capital raiser, but you also have a team that's kind of combining. How did you build out the team, and how did you think about that, in regards to their own specific, you have an outreach for founders, you have an outreach and communications with, maybe investor relations, keeping that engagement. When you're looking at building your own business out, Hermes Investments, and you're able to add that, what did you look at in regards to the criteria and the qualification for your team?
Well, the team has been built over time. I mean, Jean-Michel, I've been working with him for more than 5 years. We've known each other. It's been a good partnership from the start. And he has the LinkedIn expertise. And Ali Senga, I found him after trying to work with different people. And is with working with people, it has taken some trial and error to find the right fit. And then we stick together, and then it's been working well since then. So like that, I listened to Tai Lopez some years ago, and he was talking about that, how to find good staff. And I think in my experience in today's business age is really is to try people, see if they're a good fit, and if our values are aligned, and if they work well. So yeah, I've needed to try different people to find the current team.
Yeah, and that makes sense. I was just curious on the way you structured it, because a lot of capital raisers that I've talked to, they only have themselves, and they have to also work the deal flow. They also have to build the relationships, and they also have to make sure that things are getting down the pipeline and so forth. But you've been able to facilitate a team. Now, I want to talk a little bit about the negotiation of the deal on the back end. We talked offline about, you have the fee plus commission plus, potential access or maybe some equity, depending upon how the structure is. I know it's very contextual depending upon each deal, but when you're walking into a deal and maybe you see something that you want to get involved with, and you got some investors that are very excited about it, and you get that down the goal line, how do you look at negotiating the deal for yourself and for your firm?
There was a bit of trial and error at the beginning, the first year, and the second year, and now our fee structure is clear with a weekly fee and the discretionary bonus or a commission, and this has worked well. We're looking at the investment and the return on the back end. It's something that probably start implementing next year because it's beneficial to all parties, and investors like that structure as well. So, and it's a very interesting question because there is the psychology of the deal, the interest of all the parties need to be aligned, and there's a bit of trial and error. I mean, there was at the beginning to see what works with companies, with investors, with us.
Do you ever structure, and this is the fee for the founder, correct? And be able to harness your network, correct? Or okay, it's not the fee for the investor to get access to your deal flow. Is that correct?
Right now, there's no fee for the investor. There are some companies, capital raising companies, that I know one in Florida that works like that. They work with payments by investors and also payments percentage on the investment on the back end.
Okay, and so do you ever get a success fee as well? So if they deploy X amount of dollars, you also get, success fee. I guess that's kind of the discretionary bonus. Is that correct? How it's negotiated?
Yes, In the US, yes, and also in other countries we work with a commission.
Okay, straight commission. Do you ever want like, take that commission and earn equity of that company if you see some vitality and, maybe even getting rights or a warrant on the back end and saying, "Hey, I have an option to be able to do, take some of this and deploy with this because you've been able to be the, transactor, you've been able to be the middleman."
And it's something I will start implementing next year,
Okay.
and it can be very interesting for us and for all parties. I was just listening to someone I learned from another capital raising company in Toronto, and their whole business model is like that. They vet deals for investors, and then they have an investment option with the company. It's just 1%, and then some companies will grow 10x, and then their investment will be worth a significant amount of money.
Yeah, it's an impressive deal. I've had some friends. That's why I was asking you kind of how you structure it and why that is, because I've had some where it's just straight success fee. It's kind of results oriented. Hey, if I be able to perform and get the right thing and transact, wonderful, I get a percentage. But also, I've seen some individuals that are very aggressive in regards to equity and getting that equity of that company to help them to help the founder deploy capital, because obviously a lot of people are looking to that, and definitely if you're really good at it, I can understand the importance of equity, and having that. So that's why I was just curious how you structure, but you're going to start implementing that later on. But now, right now, it's very simple fee structure plus some success rate or commission on the back end, depending upon obviously the amount that was deployed.
That's right, yeah. And the equity approach requires patience. You have to wait for an exit, or the supplier or the company goes for an IPO, but it can be very rewarding. So long term, I think it's
Yeah, yeah. I'm always just intrigued to see what they look like. Tony, I really appreciate you being on here, man. Just talking about kind of what you've been able to do, the evolution of it, some certain capital raising techniques you've been able to implement, as well as your team having the right structure, deal flow, and the right investor relationships that you've been able to establish long term, and really seeing just at a macro economy, even with everything that's kind of turmoil, you're still seeing activity going. Like you mentioned, international kind of deal flow, really focusing on India as well as Europe and different, even Middle East, Asia, and so forth. So it's really exciting to hear that. For those that want to reach out to you, whether they're a founder, whether they're looking for capital raising, whether they want to have a conversation with you and kind of getting access to your network and your expertise, how do they reach out to you, my man?
they can reach out on our website, hermesinvestment.biz, or they can look for me on LinkedIn with my name, Antony Chauvet. These are the main two ways.
Awesome. And guys, just to make it easy for you, all those links are in the description below, so you guys can reach out to him. I'll put his website, his LinkedIn, so you guys can connect with him. Again, Anthony, I really appreciate you being on here. I love the value that you brought. And definitely in this macro economy, I know this was very valuable for a lot of founders as well as a lot of investors that are looking to get access to kind of your deal flow. And the very exciting, definitely exciting times in AI, impact investing, ESG, and cybersecurity. Guys, that is my friend, the CEO of Hermes Investment Services, the one and only Antony Chauvet. Guys, that is Journey with Christian Diava's podcast. Until next time, be uncommon if you can.